Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, we did conclude our series, and it's in the Guardian article, Guardian newspaper this morning, on the aggressive investor. However, today we are focusing with the limited time available on the earnings results of two of the stalwarts in the manufacturing and construction industries. We're talking, of course, about TCL as well as Deco. Now, both groups have reported pretty good earnings for their respective half-year periods. Let's take a look at how they would have done and what investors might expect in the coming months ahead. Turning firstly to Deco, well, the group reported an earnings per share figure of $1.05 for that half-year period ended June 2024, which is a 22% increase compared to the 86 cents per share recorded in the prior comparable period of half-year 2023. Revenues were up an impressive 6.2% from $174.4 million to just about $185 million. Gross profits, which excludes those unrealized gains on property revaluations, were up 8.4% from 117 odd million to just about 126.7 million, with operating profits, which is inclusive of those unrealized gains from those property revaluations, up 23.8% from 40.1 million to just about, 49.7 million. Overall profits for the period increased at 22.1% from 53.8 million to just about 41.3 million. Now, when we take a look at that revenue trend, it certainly is promising for Deco and its shareholders. With post-COVID, of course, some robust revenue growth, up 6.4% in the half year of 2021 and 13.6% in that half year of 2022. And with a marginal dip in half year 2023, we've seen a 6.2% increase in that half year 2024 period, of course, on increases in throughput, mainly from its containerized business, containerized shipping business. So when we take a look at the margin operations of Deco, specifically the profit before tax margins, and we've done an adjusted profit before tax margin analysis to adjust for those unrealized gains from property revaluation, we can see that there was a pretty positive trend over the past couple comparable periods, with that PBT from adjusted PBT margins from operations hovering around 8 to 8.4% in 2020 and 2021, improved to around 10% in 2022, had a dip to around 4.5% in 2023, and we're focusing, of course, on those green columns, and has recovered nicely to 10.6% in that half year, most recently concluded period of half year 2024, of course, signaling a pretty robust bounce back to profitability or increased profitability for Deco for the most recently concluded period. So at a price of $3.15, Deco is trading at that 2.1 times reported price earnings ratio, with a dividend yield of a reasonably healthy 3.2%. So on the basis of revenue growth and that improving operating efficiency, Bourse is maintaining its market weight rating on Deco PLD for the time being. Turning quickly to Trinidad Cement Limited, or TCL, for their half-year period ended June 2024, the group would have reported an earnings per share figure of 35 cents per share, which is a whopping 70% increase from the 20 cents reported in that prior comparable period of 2023. Now, revenues were up a fairly modest 2.8%, from just under 1.15 billion to about 1.18 billion. Gross profit margins, however, increasing a fairly substantive 27.6% from 337 million to just about 430 million. Overall net income attributable to profit to shareholders increased at 70.3% to 128.5 million. Now, when we take a look at revenue by segment for TCL, we can see that there has been consistent growth across their two major segments, or their two segments in total, with cement sales, of course, increasing consistently from that half-year period of 2020, from just around 750 odd million, consistently with a minor dip, with no major dips, in fact, to that $1.129 billion mark in that half-year period of 2024. The same can be said for that concrete segment, improving from 25.9 million in terms of revenues in that half-year period of 2020, doubling to its current level of around $50.7 million overall. Now, when we take a look at operating and profit before tax margins for TCL, again, the story is a positive one. So we're going to focus on the profit before tax margin story, which is that yellow column, or those yellow columns. And we can see that despite some volatility over the half year 2021 to 2023 period. The half year 2024 period has bounced back pretty nicely with a profit before tax margin of 19.1%. Again, for what does that mean for shareholders and investors? It means that on a before tax basis, TCL is doing a better job of converting revenues to more profits for its shareholders at this particular point in time. And of course, the big news would be that after several years of an absence of dividends, TCL did declare a dividend of around 8 cents per share. The last dividend coming, based on records, back in 2017, which was about 2 cents per share. So certainly welcome news for investors who are looking for that income component from a stock which has traded typically range bound in history with the declaration of a dividend of 8 cents per share. So at a price of $2.91, TCL is trading at that price earnings ratio of 6.8 times below the sector average of 11.1 times, signaling some value in store there with a dividend yield of 2.8%, which is below the sector average of 3.4%. But keeping in mind that revenue growth, improving or higher margins, and of course that return to dividends, which income-oriented investors will be keeping an eye on. Of course, Bourse is maintaining its market weight ratio for the time being on TCL. But that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at invest@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can catch this week's article in the business section of the Trinidad and Tobago Guardian newspaper, which includes our concluding piece on the aggressive investor and our overall investor series of the different risk profiles of investors. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.